Hi, good morning, good evening. Welcome back to the Dummy Investor channel. This is a place where I periodically post my commentary and personal experience of being a retail investor myself, investing in the equity markets. And hopefully, over a period of time, we'll be able to reach a place where other retail investors are able to contribute and share their perspectives on investing in the stock market and generate sustainable long-term returns by investing wisely and prudently. So now we are on December 12th, 2020, and I thought it's a good time to just do a recap of how the market behaved in the last 1 week and generally where we are in the market cycle, which sectors are sort of leading the charge, which sectors are relatively underperforming, and so on and so forth. And so let's just dive straight in and look at a few charts and see what is driving the current state of the market. So, sorry, as you can see, the Nifty yesterday, on that is the 11th of December, closed marginally on the positive side. I mean, it was up 0.26%, and the yesterday the energy stocks were sort of going off the charts, and that was partly driven by the fact that global crude oil prices moved up above $50 per barrel after a very long time. And generally, I think many research firms are predicting that crude oil prices will harden a bit after a prolonged decrease and decline in crude oil prices because of the COVID situation and because of the whole OPEC, non-OPEC, tug of war that was going on. And so the markets took that as a cue, and obviously that resulted in the Nifty Energy Index moving up by roughly 1.6%, as you can see on the chart. Now, I do want to make a mention right at the start is that what I'm doing here is I'm comparing the Nifty 50 benchmark index, which is the main benchmark index of the Indian stock market, with some of the sectoral indices which you see on the left hand side. And having said that, not all companies get covered in these sectoral indices. For example, Nifty Pharma has a group of 10 odd companies, whereas there are many more pharma companies which are listed in the stock market. So it might not be a real true reflection of all pharma companies or all companies under a particular sector, but I think it just gives us a overall barometer and general direction in which a sector is moving. So just on the 1 day chart, obviously, everything was sort of grouped together, but clearly the standout index was the energy index, followed closely by metals. And actually, this has been more of a trend in the last 1 month, which I'm going to cover very shortly. A lot of the movement in the last few weeks has been driven by energy companies, commodity companies, metals, and also real estate companies. And it sort of gives the indication that the market is sort of now betting on a cyclical up move in some of these cyclical beaten down industries. And it'll be an interesting trend to watch whether it's just looking for value in sectors where there isn't any value, or whether on the face of it there is real genuine value because these sectors have been beaten down for quite some time. uh, but just moving on, let's just look at the overall performance of some of these indices in the last 1 week. And one of the interesting thing that came out very clearly was this FMCG index, by far going up by 6.21%, by far leading the charge in that sense. And I've got some theories behind why this would have been the case, and we'll come to that later on. But that was a very interesting trend. And mind you, FMCG sector generally if you look at the entire sector, not just the index, but just all listed companies, then FMCG has been one of the relative underperformers in the last 3 odd months. Not to say that it has degrown or given negative returns, but the returns have been, I would say, more consistent with how FMCG companies return, in the sense 8 to 9%, and whereas everything else has been just going up, off the charts. And it was fairly pretty interesting to see that this week a lot of money was deployed on buying FMCG companies. I mean, Hindustan Unilever was up, Godrej Consumer was up, Tata Consumer was up. All these consumer-facing companies were actually up. This was followed, I mean, I wouldn't say closely, but it was followed by Realty. And again, coming back to my initial point, real estate has been one of the sectors which has been on the move, and on followed closely by consumption stocks. So general theme was real estate, FMCG, consumption, which sort of did well this week. The Nifty was actually up by roughly 1.93% this week, and so Nifty continues its week-on-week unabated growth. And one wonders now, I think we are in the fifth week where the Nifty or the benchmark index is up, and one wonders how long will this continue. I mean, there has to be a limit to this, but clearly so far what's driving this up move in the Nifty and generally the market is that a lot of foreign money is coming in. And actually, if you notice the trend, foreign investors are buying, net buyers, whereas domestic investors, including mutual funds, are net sellers. Partly driven by redemptions, partly, I guess, I'm guessing domestic investors have sensed sort of that the markets are expensive or richly valued. Only time will tell, but that's been the trend. So it'll be interesting how this FII versus DII theme plays out. But clearly, so far, FIIs have been driving their growth in the market across all sectors. The only sector worth mentioning which saw some dip this week was actually auto. And I don't know why sort of auto saw a decline, but it was just a marginal, 1.2% dip. Now, this is obviously just a weak performance. Let's just stagger the timeline a bit more and look at the monthly performance. And this is where some things just stand out, so clearly. You see the green line, and that is the Nifty Real Estate Index, followed very closely by the Nifty Metal Index. And it's interesting. The two sectors which are typical beaten down cyclical sectors, which have a lot of issues in terms of profitability, high debt levels, lack of utilization, unsold inventory, reliance on, in case of metals, reliance on, global metal prices. These are the two sectors which have actually done exceedingly well in the last 1 month over above anything else. I mean, the closest that comes to this is, like I said, FMCG, which has been sort of a, it's more like a consistent performer. It'll give you more or less on any given month or a quarter, a good 8 to 9%. And so, like I said, real estate was up 24% this past 1 month. Metals have been up 22% and followed closely by FMCG 12%. On the flip side, I mean, nothing was negative. All broad sector indices have given positive returns, but of course, we are talking relative returns here. And financial services have been relative underperformers, if I can put it that way. And so these would include the likes of NBFCs and all other financial institutions, and that has only grown roughly 4.5%. Is it a buying opportunity? I think we'll have to go very stock specific, but broadly it has grown flat, if I can put it this way. And the Nifty itself has grown 6%, as you can see in the black line. and everything else, obviously, like I said, has been in that range between 12% to 4%. And so these are the two standout sectors, energy and metals, in the last 3 months, or would say one quarter, and or sorry, last 1 month. My apologies. And it's an interesting trend to see. Now, just shifting it further back, let's look at the last 3 months, and I'm probably going to cover this a bit more in detail in some other video, but just in terms of the broad optics, um, Bank Nifty has clearly led the charge. Followed very closely by, I'm guessing this is real estate, yeah. And so real estate and Bank Nifty have driven the charge in the last, quarter or so, 3 months. And clearly, all sectors again have given positive results. The lowest performing sector, if I can put it like that, has been energy. And but then we saw, this recent up move in energy in the last, one day or 1 week or so. So it'll be interesting to see whether energy continues to go up, whether this is more like a feel-good factor that crude has gone above $50, or whether this is something which is sustainable. Clearly, ONGC, GAIL, all these guys saw a big jump, in this week, and it'll be an interesting trend to watch out for. Now, let's just quickly try and see what underlying stocks actually contributed to, this growth in the last 1 week. And I'm just going to restrict it to the last 1 week and the 1 month. Like I mentioned, in the last 1 week, FMCG was clearly the standout from the crowd, 6% up. And if you see the, past 1 week performance, all FMCG companies actually were in the green, led by ITC. ITC, everybody's betting on ITC as a well diversified FMCG play, and clearly it has given great returns in the not just in the last 1 week, but also in the past 1 month. Unilever, surprisingly, Unilever and Nestle are two stocks which are always expensive, and one is always praying for a correction so that one can get in, and that chance comes very rarely, but it just keeps on going up. And uh, interestingly, other companies, Marico, Jubilant Foodworks, please remember that Burger King IPO got oversubscribed, and oversubscribed many times. And so looks like the market is, I mean, the reason why I think FMCG was up this week was possibly because certain sections of the market felt they need to deploy some capital in a safe sector, and FMCG and pharma are two safe sectors. And I think everybody is also betting on consumption as a theme, now that we are, the vaccine news is circulating, and everybody is hoping that Indian economy will start going back to its normal growth curve, and consumption obviously will be one of the main things to look out for given the large population size and middle class. And so I'm guessing that's what is driving this interest in the FMCG sector this week. Like I said, it's a very consistent sector performance. I mean, it won't you know, sort of give outlandish returns, but at the same time, it'll not sort of give bad returns on any given day as well. So that was FMCG. And the only reason why I mentioned energy was because, like I said, one day yesterday, energy was up, because of crude going above $50. Now let us look at the monthly two sectors, and we identified real estate and metals. And as you can see, everything is up, and if you see the 1 month trend, Godrej Properties up 31%, Phoenix Mills, Oberoi Realty, Brigade, Shobha, everything is up. And I think that is partly got to do with the fact that given that markets have run up so much, investors are at least a I'm guessing a sizable crowd of the retail investor group is looking at real estate again more seriously as an alternate asset class. Given the fact that interest rates are coming down, home loan rates have come down, state governments are giving a lot of incentives in terms of reducing stamp duty and so on and so forth. It's possibly, I mean, given that prices have been stagnant for 2, 3 years now, real estate prices, it could be on the cusp of some turnaround, but only time will tell. But clearly, the markets are anticipating that to happen, and that's why real estate is up 24%. Now, just in conclusion, let's just also look at Nifty Metals. Metals was up 22%. I think mainly driven by an anticipated demand increase for steel and other metals by China. Metal prices have been going up globally, and obviously it's great for metal companies when prices go up, prices firm up, and that sort of improves their margin. Also, I think this whole COVID situation has forced companies to do some cost rationalization and better working capital management, and so there have been reports of improved utilization. But these are very I don't know. These sectors are very. If you get it right, you really make good money. But then there's a high risk of timing this wrongly. And at best, it'll be more of a tactical play. I mean, just from my perspective, these are two sectors, and possibly energy is something which I don't hold in my portfolio. And I just feel that on the long term, the financial health of some of the companies operating in real estate and commodities and energy is sort of at best dicey. And so but people have made money through many ways, and clearly there seems to be some tactical opportunity here. Just from my perspective, from a long-term investing portfolio perspective, I don't own any companies in any of these sectors. So obviously, what that has meant is that my portfolio has not performed as well as some of these indices in the last, 1 month or 3 months, and but it's in a good place. So that was what I had to cover for today's session. I hope you found this video to be useful. Please do like the video, subscribe to the channel, and do more importantly provide your feedback and comments on anything else you would be interested to know about or for me to talk about. Thank you so much and have a great day.